But guys, let's go ahead and get started with our weekly webinar. Thank you guys for joining us today. It is a brand new week. It is Sunday, July 22nd, and we are kicking it off already taking a trade, and it's already actually in some profits if you guys place the trade. So I don't usually drop free trades too often. It's actually very rare that I do so and give out like the entire stop loss and take profit like I do to my group in Slack. So this is a trade that I've placed on all of the trade copiers, all my accounts, and we're in right now. So we'll actually come back to this trade, but if you aren't already in it, entry should be at 75.80, stop loss at 76.20, and take profit at 74.20. So if you do the math, we are entering this trade and going to be risking 40 pips to make 160 pips. That's a 1 to 4 risk to reward. So essentially, you know, me personally, I'm risking 2%, and all of the clients and everybody that's connected to the account, we're risking 2% of our account. So it's actually going to be a little bit less than 2%. So about 2% to make about 8%. So we're going to get more. We'll revisit this trade towards the end of the webinar, exactly why I'm in it, why the stop loss is where it's at, why the take profit is where it's at. So maybe some of you guys that want to get into my head and understand how I trade and you know why I take the trades I do, that can be useful for you. So let's jump right into things. First off, I want to just mention that this week should be pretty good for trading because there's not a lot of economic, like high impact economic news. Usually on weeks when there's like red folders all throughout the week, it makes it a little bit difficult to trade. Just because you know we know that we can see that the markets are going to be volatile, so it makes it a little less appealing to get into trades. But we can see that scrolling through this week, it's very, very light. Really, the only like two things that I see is Tuesday evening, there's some CPI, some quarter-over-quarter reports for the Australian dollar. And then Thursday morning, there is a European Central Bank press conference as well as a core durable goods order for the dollar. So a couple high impact news. But other than that, like those two specific events, like for those couple hours in between or surrounding those events, the rest of this week should be pretty smooth sailing. And I forecast, you know, a lot of the trades that have to do with the dollar should go pretty smoothly if you're trading the dollar. So that being said, I know many of you guys watching this are in the Telegram. You aren't a part of like my Slack channel where I do my daily webinars for everybody if you're a paid member. But Thursday going into Friday, I drew this this line before this red bar had even happened. And I was expecting some dollar weakness. If you guys actually got a chance to look at the MyFX book, I'm actually just going to pull that up really quickly. So some of you guys were curious. I have both MyFX books running very quick. I'm just going to very quickly pull up the one. So this is the MyFX book that most people have been asking about. This is the MyFX book for the new public trade copy, or the free one that anybody can get connected to. You just have to click on the link inside of Telegram or anywhere you see the link that I have it posted to go open an account with the broker FX Choice. So you can use the trade copier for free. But I just want to show you guys that, it doesn't show this week anymore because that was last week. But anyways, you can see, just to start off, I just want to recap this for some of you guys that were curious. So I started trading this on June, and this, by the way, follows all of the signals that are taken inside of Slack and then some. Occasionally, like I'll see a trade where I might not have time to, like it might be on the 1 minute or 5 minute where I might not have enough time to like copy and paste my signal template and then write my analysis for it and my stop loss and my take profit like I always do with all my signals. So there may be occasionally a scalp here or two there, but most of these signals you'll see most of these trades reflect the same signals that are given out inside of Slack. So we had a trade that actually went back to break even. So when you see this trade at 0%, that goes to 0.03%. It was a trade that we were up like 2 or 3% on, but then it went back to break even. So I usually move my stop loss just enough to cover the fees, like if there's a commission fee or, to cover the spread with the broker. So that's why you see this with just a small gain. And then we had a loss. So that is a 2% loss. I risked 2% per trade. Then we had another loss. So that brought us down to -4%. Then we had a trade that went into 3% profit, then went back to break even. So we stayed at 4%. Then we had another trade that went into 3% and then went back to break even. So we stayed at 4%. And then we had a trade that we had closed a trailing stop loss. We made about 3% on. Had another trade that closed on a trailing stop loss on another 3% on. And then last week, towards the end of last week on Friday, when we saw those nice moves, we went from 1.7% to 6.7%, so made 5%. So pretty much last week, if you do the math, we made like 11% in 1 week. So if you want to follow the link for this, I'll go ahead and I'll post it inside of the chat for you. And the reason this is free, for some of you guys that are wondering like what the catch is, there is a 35% management fee. So for example, let's say in a month, I make you $1,000, you know, not to say that I will, let's just say you have the balance where the, you know, the percentage that I make you of profits is $1,000 for you. 35% of that would go to me and 65% of that would go to you. So it's win-win. I'm making you money and I'm essentially, you're making me money by me making you money, if that makes sense. So I wouldn't make money for myself if I wasn't trading and being profitable for you guys, if that makes sense. That business model would not work. So follow this. It's going to go really well. And then, of course, we have the other ma'am, which has over 12 months of the track record as well. But I just wanted to go over that, the newer one. So anyways, I'm just kind of giving you guys that as a precursor to show you guys that like really my analysis has been really spot on. My trades have been really spot on lately. So it's probably important that you listen and take some notes because things have been really spot on. Like I've been predicting what the dollar is going to do on a day-to-day basis almost to a T recently, and we've been taking advantage of that. As you can see in those results, they reflect that. So this week, what am I expecting? Just getting straight to the point, I'm expecting dollar weakness, okay? We started to see it at the end of last week. You can really start to see where there was a little bit of momentum for the dollar, and then the sellers start to step in. They kind of like hint that they're going to step in. We really see that move from the sellers come in on Friday, and then we can that aggressive move on Friday, and then we can see start of this week there's already the aggressive sellers picking up. So yeah, that's where I stand. I stand bearish on the dollar. Now, of course, I am recognizing this long-term uptrend, right? Ever since we broke this move earlier this year, and we've been in a major long-term uptrend. But look at what's been happening the past couple of weeks. We've kind of like reached a top, like a very struggling stopping point, a very strong point of resistance for the dollar index. And I expect price to react against this area. You know, this is a very strong zone. So we're probably going to see price be respective or act accordingly and see some downside. So, you know, it's when I say that I could see some upside, but immediate downside, it could be something like this, right? We could see like this week a fall, maybe retest of the 93 area, 93.2 zone, and then maybe some more upturn or some more medium to long-term upside as the Federal Reserve raises interest rates and the outlook for the dollar, you know, strengthens. But as of right now, technicals point to the downside. Gold, of course, we're expecting downside on the dollar and upside on gold. I just want to show you guys just one thing really quickly. So for some of you guys that I'm just going to switch to trading, you know what actually I'm going to do real quick. I'm just going to show my whole desktop. Okay, so you guys should be able to see my whole desktop. Let's go here. And let's look at, I want to skip back to a trade. Hold on. March, April. Sorry, guys. I just want to recap something really quickly. This is all gonna make sense. Let me just find it. It was something I gave. Okay, so here we go. All right. We are in July. It is July 22nd right now. This was on June 14th. All right. I said pairs to watch, and I said to screenshot this. Gold. All right. Let's look on the daily. June 14th. June 14th. That is right here. Okay. That's right here. I said in Telegram, expecting gold to dip back below 1300 and head towards 1280. And for those of you guys that had been watching the webinars, 1280 was just our first target because of this trend line. But we had this lower trend line here for a long time, and I said after 1280 it's going to 1250. Okay, so that's the first one. The second one, Euro USD. I said expecting yearly low 115.15 to be retested and see further temporary downside. That June 14th. That was right here. That was on this day. That was before this drop of that day. And sure enough, it dropped right back down. Okay. Another one, pound yen. I said expecting a retest of I said expecting retest of 144. Right? Let's go to June 14th. June 14th, right here. This red candle is June 14th. Where were we on June 14th? I said 146.72. Where do we go down to? It didn't happen right away, right? Took a few days, but it went down to 144. It went down to 143. Retested 143. USD CAD. I said targeting 134. Fifth and final wave. Explained on the weekly outlook. This was on June 14th. Okay, June 14th, guys. Right here. That was on this push day. This day right here. Where was price at on that day? It was at the 130s, and I said it's going to 134. Okay? So, guys, I don't show you guys this to brag. I show you guys this so even if just one of you guys watching this, it clicks and it's like, wow, it's actually like important for me to probably like pay attention and take some notes and take this seriously. Even if you're in the free group, guys, I'm dropping all this information in the free group too for you guys. Maybe it's not on a day-to-day basis, but I'm still dropping this information for you guys out there. That was in the free group. You guys saw that. That was in Telegram. That was a month. Like you guys saw all those moves. You count up all those moves. That's hundreds. That's literally probably 1,000 pips right there. I mean, on USD CAD alone, that's 400 pips, right? On pound yen, now is another 200 pips. That's 600 pips between two of those pairs right there. Gold, well, another couple hundred pips with a drop from 1,300 to 1,280 and then down to 1,250. Like literally thousands and thousands and thousands of pips are caught, and we're catching these moves. We're taking these trades. We're catching these intraday trades and swing moves in the markets. So it's probably important that you guys are watching this stuff. So let's get back to the charts and get back into everything. So upside on dollar, downside on dollar, upside on Euro USD. This is just a little quick scalp trade from the end of last week. Like, look at these little trades, right? Like really nice risk to reward, right? Locked in a little like 1-2% on this trade last week. Expecting more upside on Euro USD this week, right? Euro USD does the exact opposite of the dollar index, just point blank, okay? So downside on dollar index, upside on Euro USD. USD Swiss franc, it is being rejected off of parity right now. It's going down, okay? It's going down. It's going down to at least this trend line. I mean, not this trend line, that 50 EMA. Pound dollar, not interested. I wouldn't really touch pound dollar right now. It's probably going to see upside though because of the dollar weakness. Dollar weakness, Euro USD strength, just the weakness from the dollar all around the board should be enough to push this pair higher. But like definitely like out of all the pairs on here, that's one of the last pairs I would trade. Absolutely. Pound yen downside, huge downside. Like downside, guys. Like I can't even say it any more clearly. Like every single pair that ends with yen is going to see major downside this week. Point blank to just take advantage of that. Like there's only 13 of you guys watching this live right here. Every single 13 of you guys better be in that NZD JPY short. Well, I mean, I always have to have that disclaimer because these are recorded and they go up on YouTube like this. It's not financial advice, guys, but I highly recommend, like I manage my parents' money. My parents are in the fund. Like I just feel so strongly about these trades, guys. Like, I don't take trades that I don't feel confident about. It's as simple as that, okay? Okay. Pound yen, downside this week. Big, strong, bearish engulfing candle. Big rejection, the 148, guys. Like you guys want to know why I played some weird music in the beginning? It's because I'm excited. Because I do weird shit like that when I'm excited. All right? And I'm excited about this week. It's going to be a big, big week. We had a 10% week last week. My summer, I always tell you guys, I say it on every single, like all the webinars, that summer months are the best. July, August, I always perform the best. I mean, numbers speak louder than words, and they continue to speak loud every single year when I have these killer summer months. So take advantage of these, guys. For whatever reason, the markets get really, well, I know what reason it is, but anyways, pound yen, downside. Look for downside. Lots of consolidation. Below 148, it's going to see downside this week, right? It's going to go like, it's probably going to retest 144.50. That's already 130 pips lower, but like I'm saying like major downside. Yes, we're going to probably see this year's low is broken, which is like 142.90. So that's like 143, couple hundred. That's like 300 pips lower. So just major, major, major downside. Where would I be targeting? Like, I'd be targeting something like this. I'd be taking notes of where the 50% retracement level is, right? And then I'm just going to delete this. And then I'm actually going to see where the extension, our 161.8 extension, is on this bad boy. So, I mean, 50% retracement level is around the 148 or the 140 area, and 161.8% retracement level is like 139.50 area. So we could like call it the 140 area. So if we target 140 from now, we're at 145.78. That's 578 pips lower. So like that's what I mean when I say that there's plenty of room to the downside. Hundreds and hundreds of pips, okay? This is dollar yen. This is a trade. We placed this trade at the end of last week. This is a signal that was given out inside of the trading group. So you guys notice like a theme with the signals too. You notice every single signal we're always risking a little bit to make a lot. That's the way it should always be. We aren't, you notice we aren't like risking a lot to make a little. We aren't risking 50 pips to make 10 pips or risking 40 pips to make 156 pips. We did close this trade before the end of the week, unfortunately. I didn't want to hold the trade over the weekend with the G20 meetings. So we we missed out on a pretty decent amount of profit, missed out on like 100 pips of profit. We closed pretty early on this pair, but nevertheless, entry, stop loss, take profit, like spot on. So I'm going to just delete this, but major downside yen pairs this week. AUD USD, NZD USD seem to have like found a temporary bottom, kind of like Euro USD. So expect a correction and a buying pressure on those. USD CAD opposite of gold, opposite of AUD USD, opposite of NZD USD. So all of those we're looking to potentially buy this week. So USD CAD would be good for a sell this week. Ooh, yeah, USD CAD is really good for a sell, actually. Look at that. Anytime I see an exhaustion candle on the weekly, like it might sound cliche, but that's just easy money, guys. It's just free money. Not always, right? You can play the devil's advocate sometimes, like back here. Definitely a good example. But I mean, ultimately, right, long term, we just saw some manipulation happen, but then ultimately there was this selling pressure that was built up back here. It was really, we just saw a big fake out and then this evening star form and then the real move down, right? So it's still valid, right? So downside on USD CAD. So I can't say it enough, guys. Big moves. And then let's finish it off with, I'm not going to look at any of these other ones. We're just going to look at the one that we're interested in, which is NZDJPY. So I know some of you guys are wondering, like, what the heck are we looking at this for? You guys that have been following me for years probably know that this isn't one that we normally look at. However, I have broadened and expanded just ever so lightly into some pairs that move pretty good, pretty well. Pretty good? Yeah, pretty good. I think that's right. So anyways, a couple things just to kind of scale out. Let's just get into the nitty gritty. I'll very quickly run through this trade as to why I placed it. really it starts off on the weekly, and a combination of the weekly and the daily, seeing that we were in a little bit of a wedge. And for some of you guys that have been following me, we've actually had this pair on our chart for like two or 3 weeks now. And I had drawn this trend line back a few weeks ago when we bounced right off of here. And I wanted to see if we got this bounce. We ended up getting this bounce, and we also got this bounce on Thursday. So this wedge is, respected, or, price action is respective of this wedge. And being so that we got such a strong rejection last week, I'm expecting more downside towards the bottom of this wedge. So that would explain to you why my target is where it is. Not only is it retesting the lows, which would make a lot of sense, but it's also retesting an area where, if we were to go down to the bottom of this wedge, which would be the most logical, that's the area of price, right? And then as far as really why place this trade so early on, well, for starters, the weekly. I looked at previous price action on the chart, and I saw last time we came up to this trend line, and we saw an exhaustion candle after a little bit of a bullish run. We saw the following 2 weeks immediately bullish for NZD-JPY, so that was the main factor to me taking a sell on this pair. Also, though, if this makes any sense, the dollar helped correlate to this. And let me just break this down real quick. Write this down, draw this in your trading journal, draw this web of correlation if you don't already have this, okay? So, because you're probably wondering, how does the dollar correlate to NZD-JPY? Here's how. The US dollar and gold have a negative correlation. Okay, so we know that. Gold and dollar yen, or gold and pound yen, have a negative correlation to each other. So essentially what you could say is the dollar index and USD-JPY and pound yen have a positive correlation to each other. So what is this if we tie everything together, right? So if we're expecting the dollar to go down, which means gold should go up, and we know that pound yen and dollar yen do the opposite of gold, then we also see that yen is the quote currency on NZD-JPY, and dollar yen, it's just like pound yen, dollar yen, NZD-JPY. These pairs end with the yen, right? They are not the base currency, they're the quote currency. So they should all correlate positively to each other. So if I'm expecting pound yen and dollar yen to also go down, then it would make sense for this pair to go down as well. So that's how the dollar correlates to this trade as well. So it's a lot of factors besides just one candlestick. Sometimes it's like one candlestick that really makes me kind of be like, I should look at this pair, that makes me interested in that pair, but it's a lot of other factors that ultimately lead me to making the decision to place that trade. Okay. And then, of course, we have that very, very nice confluence on Thursday. We have that very nice strong rejection. We also have more and more confluence, price right below the 4-hour, the 50 EMA on the daily. So that is leading us to taking a trade right when the market opens, so we don't miss this drop like it dropped so aggressively the last time we had seen a similar situation back here. And then I already went over, so that's entry. I already went over take profit. And then, of course, the most important thing is our stop loss to understand where our risk is going to lie. I have had a pretty good time recently trading, putting my stop loss just above or below, not just support, but also if the support coincides with the EMA. In this case, it does, right? On the 4-hour chart, we can see kind of this consolidation area is just below the 50 EMA on the 4-hour, so we have our stop loss just above there. But really, this trade is a a daily and weekly analysis type time frame. So the 4-hour just kind of added confluence. It really was this daily right here, and I just put it just above the 50 EMA and also just above the high, which is also the high of Friday. Okay, so pretty. It's not too big. I'm not unless it's like a very long-term swing trade that I plan on being in for like a week or two. I'm not a really big fan of having trades that are really anything over like 50, 60 pip stop losses. So I think this is appropriate. And then we're risking 100, or we're risking for that those 40 pips to make 160 pips. So all around, just a, you know, a solid looking trade. So that's gonna be it for this week, guys. Look for that dollar weakness. You know, trade you know, accordingly. If you're already in the trade, we're in about 20 pips of profit right now, or like, I guess with the spread and stuff, about 15 pips of profit. So let's see how this plays out once we get to the 1-to-1 risk to reward area. So once we're like in profit, the same amount of pips that we're risking. So once we're up 40 pips, we should look at setting our stop loss to break even. And that's that. If you guys have any questions, if you are interested in getting connected to my free trade copier with the 35% profit share split, or you are interested in hopping on board for my daily webinars, if you're interested in like learning for yourself and like, you know, being a part of one of these webinars that I do on Sunday, like every single day throughout the week for consistency, or you want some of my training or whatnot, shoot me a message or go to my website, positivetraders.us. And if you're watching this replay on YouTube, drop a comment and leave a thumbs up. So thanks, guys. I appreciate your time. Have a great week. I'll see you guys next week on the next webinar, and take care, guys. See you guys.